You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our Learn Method.
Before you invest, you need to 1. Look at your financial position. 2. Establish your personal goals. 3. Assess your investment options. 4. Research the best options for you. And 5. Normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.
All right, hope everybody is having a great day. Today we're going to be going through the prospectus for Woodcats International. It is officially the first IPO for 2026. So we're going to do our usual prospectus review. I'm going to go through that in a second. But first I'm going to ask you to actually share this video. I know persons will be wondering what they should do about this IPO. This is the video that they should watch, right? So this is possibly one of the most important videos in the process of determining whether or not an investment is for you. So you want to go through the prospectus, understand the company, understand what it's offering and all of that good stuff. And it starts with this review. All right. So this is a very important part of your research. So for anyone you know who may be interested, share this with them. All right. So let's jump right in here. I'm going to break this down into a few key areas. There are some things that I'll kind of focus on after we do the basic overview. And then, of course, if you have any questions, feel free to post them. We will be having an interview with the company and broker on Friday. Renee is going to lead that conversation on Friday. But if you are on our email list, we sent out both emails a short while ago, so you should have links to both. All right, so let's jump right in here. So I have to say that this review is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell this IPO or any other securities. All right, so we're going to break down this review into 5 parts. So we're going to just talk a little bit about the company's history, what they do, how they got started, things like that. And then we're going to get into the offer details. What are they offering? How much are they seeking to raise? All of that good stuff. And then we look at the financials, right? One of the things we always try to do is understand, is the company making money? Where are they on their journey? What are the areas that we may have some concerns over? So the financials will tell us a lot, especially that part where we look to see the dividend policy. That's my favorite part. So that comes right after. In this case, we're going to be looking at their strategic outlook as well. They've included that, which was a good thing to see for the prospectus. Not all companies tell you where they're headed. So we're going to look at that. And then we talk about, for those who are interested, how to apply and so on. All right. So let's jump into the company overview here. So it says, and this information can be found in the prospectus as well as the company's website. I do have the website up here that we're going to look at in a second, but this was just taken from the prospectus. So the company was incorporated on January 13th, 1999. The principal activity of the company is the manufacture and sale of wooden products and related byproducts, right? So the company is located in Kingston, Jamaica, 27 Slipen Road. The company was acquired by Derriman Trading Company Limited. That's a listed company in September 2018, and they design and manufacture their own wooden products and related byproducts, offering a full range of wooden pallets, wooden pallet products from initial design to final quality assurance. And then, of course, we'll go through the catalog in the next few slides and on the website as well. And so they design and manufacture its own products, and it also reconditions and repairs used wooden pallets from third parties, right? I'd be very interested to know what the market is for reconditioning and repairing, right? That's one of the questions I probably have for them on Friday. And then it says it also provides certified heat treatment services for third-party wooden products, meeting international export standards. Additionally, they distribute plastic pellets and products and produces shipping boxes, crates, and lobster traps. So I know some persons were kind of wondering if they only focus on wood, but it says here plastic as well, because some persons may be wondering if there's a bigger market for the plastic one versus the wooden one. It seems like they do both here, so that's good to see in terms of revenue mix. So this is an overview of the products. It's very small here, so I'm going to switch over to the website a little bit to make it a little bit more clear to see. So let me do that here instead. So let me switch to remove that, switch to that. Okay, so you should be seeing it a lot better now. So these are the products on its website. So the website is woodcatsinternational.com/products. So that's a site that we're on here. So you're seeing event backdrops, and Renee would know all about this. I don't know about you, but most events I go to in the last few years, there's a wooden pallet somewhere, right? Especially for like baby showers and stuff like that. I see them, quite a bit. You have customable crates, sawdust, wood shavings, planter box, gift boxes, scrap basket, the wood chip landscaping mulch. I figure this may be definitely one of those in-demand items. Floating bed base, planter boxes again, that would be similar to the one that was shown up here. Orchid boxes, stretch wraps, reinforced plastic pallets, slip sheet, patio tables, patio benches, and so on, right? And then they're featuring the wood chips down here. So they're showing three, I was gonna use the word flavors. Would that be right, Renee? I'm seeing three different options here, black, natural, and red. And that's it in terms of products that we see here, but they also have the pallets featured here. So the reconditioned one and the plastic one. And then, so they have that here as well. So they mentioned the steel reinforced plastic pallet here. So it provides a wide range of plastic and steel reinforced pellets designed to meet needs of industries such as logistics, warehousing, manufacturing, retail, and food production. And then it says, why would you choose them for it? And it goes into all of these details, and it shows you some overviews of it here. I definitely see these. I think this is the one I'm most familiar with, having, I think my father had a wholesale when I was young. I think I saw, I'm more used to seeing these. I've seen these a few times, but I don't think I've seen this one before. But of course, just because you may not be familiar with the product, you may just not be the target customer, right? So these things are used by certain types of companies a lot more than the average user would want them. And so they have a services section as well. So we say heat treatment here, pallet collection system, and pallet repair service. So you can, of course, go through the website for some more information on that. All right, so let me switch back over to my notes here. So that's really the overview of their products, when they were founded, etc. So you get an idea as to what they offer. That's going to be very important to understand how the company makes money. Now, sometimes I find it's hard to really assess how big the potential market is. That's one of the questions that we could maybe ask as well for when we do the Q&A with them on Friday. But the thing that I'm looking at here, one, is how much revenues they're able to generate, how profitable they are. I always assume there's some form of competition in the space, where if the competition is not listed, we may not know, for example, what size of the market they have as compared to their competition. But those are the kind of things you can try to to either ask about, see what information you get, and then you can try to create a picture for how the company does in terms of its business. All right. So we're going to switch over to the prospectus, and all of the remaining slides are taken from the prospectus. So I again, I encourage you to go through that. I read it through at least once. It's an easy read. I went through a few of the slides in preparing for this video. It's just take your time and not rush through, and you should be able to make it through just fine. All right. So these are the shares on offer. We have the non-reserve shares. That's for the general public. That's 283,333,334 shares. That's 34% of the overall shares on offer. And the shares are going for 90 cents each. I'll cover that on the next slide. You have the employee reserve pool, and this is going to be for employees of the company. That's 22 million shares. Then you have a strategic investor reserve, which is up to half of the offer, so 416 million shares here. And then you have a key partners reserve. I kind of wondered if maybe those two should not have been combined, but I figured that is different because they'll usually define it to say the strategic investor is this group of persons and the key partners is this group of persons. So they usually have that in the definitions section. And so let me see how quickly I can find it. If I can't find it, then I'll move on, but usually that's what that is. So I'm seeing it here. The key partners is initially reserved for prior to application from the key partner pool at a price of 90 cents. And then it has the strategic investor pool. That's the lead broker and or its affiliates, fund managers, securities dealers from whom the lead broker has advised that shares have been reserved. Right. Okay, so that makes sense, right? Because it essentially that pool is reserved for NCB and maybe its clients, different companies, etc., different funds that NCB may manage. And usually if that amount is allocated, they probably have a good chance of taking that full pool or having it be oversubscribed. So I guess that leaves the 111 million for the key partners of the company, and then the 283 million for the general public. All right. So keep on posting your questions in the chat. I'm seeing them coming in. I'll take them at the end of the review. All right. So the date of the prospectus and some key dates that you need to bear in mind. Now, the opening date is next week, right? So February 2nd, there's not a lot of time. Now, for the last few IPOs we have seen, it has been kind of a general consensus that we're like, well, that may take some time, but bear in mind in this offer, there are not a lot of shares available for the general public. And I believe persons are able to apply already. I checked on the website. So that would mean that if you are interested, you would necessarily have a lot of time to act, right? To notice you're getting the opportunity to review the prospectus now. You likely see an investor briefing, I think is scheduled for tomorrow, and so on and so forth. So if you're interested, you may want to move quickly with your application. Closing date here is February 20th. Minimum subscription of 1,000 shares, and it says you can increase in increments of 1. And of course, when you apply, there's a flat fee of $172, which is better than a percentage. So it doesn't matter how many shares you're subscribing to, you pay a flat fee. They started doing that back for IPOs a few years ago. So that's a benefit of purchasing through an IPO as opposed to buying the shares on the open market, where you'll pay a percentage of whatever the transaction is, right? So mention that it was 90 cents per share. And I'm curious, this is one of the questions I may ask, why choose 90 cents versus $1? So very interesting to see it below $1. I don't think we've seen one below $1 since Fesco, I think, which was 80 cents back a few years ago, all right? Basis of allotment, and this is when they tell you how many shares you've gotten. It says within 6 days of closing date. Now, the last three things I actually took as standard. I'm hoping that it's the same in the prospectus. If not, please forgive me. I just took, because Usually these dates are standard. So usually it does the basis of allotment within 6 days. Usually refunds are done within 10 days. And usually the listing of shares are 2 weeks or so after the closing dates. I'm assuming that those are standard. If they're slightly different, I apologize. All right. And let's move on to the use of proceeds. Now, this is where a company tells you what they're using the money for. Now, this is important to go through to understand and to determine for yourself, whether or not this is the company using the money in a way that will add value to its then shareholders. So it says here the company is conducting the invitation, which, if successful, will raise gross proceeds of about 749 million. Well, round up to 750. With 375 million will accrue to the benefit of the company, while the remaining 374 million and change will accrue to the benefit of the selling shareholder. So for those who were wondering, the reason why you saw a combined off of a sale, so it's an IPO on one side and then an existing shareholder is selling shares. So that's what it's saying here, where some money will go to the company, some money will go to the shareholder selling. That's not uncommon. That's okay here. There's no cause for concerns with that. The company estimates that the net proceeds of the invitation will be 705 million, deducting the aggregate transaction expenses. So of course the broker has to be paid and other fees to the JSE, etc. So they're saying that they're going to net that amount, and approximately 44 million will be shared equally between the company and the selling shareholder. All right. In terms of how they plan to use the money, it says here that they plan to apply the proceeds of the invitation as follows. They're going to use 187,500,000 of capital towards purchase of head resaws, forklifts, dust collection system, pallet nailing machine, wooden machinery, wood shaving machine, pallet shredder, and wood crusher. Some of these things may not make sense to you. I know some of them, I can visualize some, but not all. But this just looks like infrastructure, inventory items that they want to have in place to be able to expand and grow their business. And they're going to use 165 million towards working capital support. So that's cash that's in the business where they won't have to rely on things that maybe bank overdrafts or other loans. They can have cash within their business. And then approximately 44 million towards transaction fees, inclusive of brokerage, legal, registrar, marketing, auditors, and so on and so forth. All right. So this is a breakdown. And at the very least here, we've seen where some offers in the past might have used the money to clear debt, etc. That's not what they're doing here. They're using it to essentially reinvest in the business and increase their capacity to enable growth. So certainly good to see that there. All right, so this is the financials that we're going to go through next. But I wanted to do, before I do that, since we're actually making some good time, I'll switch out to this one here and read from the prospectus. There's a chairman's letter here to prospective investors, and I think it would give some good insights into the company, what they're doing, etc. So let's do that. All right, just give me one quick second here. All right, so it says here, on behalf of the board of directors, and please let me know in the chat if you're able to see the screen okay. I'm pleased to invite you to this invitation to participate in the combined initial public offer and offer for sale of shares in one of Jamaica's manufacturing trailblazers. So what I did think about here is, of course, this will likely be added to Select MD. That's the listed company that is aligned with the manufacturing sector. So it will be added to that, of course, while Select MD is still listed, of course, and has experienced significant growth since. We now welcome investors to share in that success and the prospectus and the prosperous future envisaged ahead. So what began as a small workshop founded by Christopher Collins 26 years ago has evolved into a structured, forward-looking enterprise guided by sound management and unwavering integrity. By 2018, the company had reached a critical juncture where it continued growth with fresh investment, and that's where we saw the detailed investment in terms of acquisition. And as I said, that's a listed company. We won't get into them here, but you can probably find details about the acquisition back when it would have happened and so on. All right. So today, under the guidance of experienced leadership and the commitment of a skilled workforce, they have become a market leader in its sector and a manufacturing and logistics success story. And it is now well positioned for expansion and product diversification. So this to me is definitely what I want to see. You've heard me say it before that, I believe, for example, as a junior market company, relatively smaller company compared to, some of the main market ones, I want to see a company that is going to be positioned for expansion, diversity of products, and growth, right? So this is certainly something that I'm happy to see here. So they're certified internationally and is equipped to provide heat treatment for pallets, carrying products for export and re-export, right? So this is good to see as well, because I would imagine that there's a business outside of Jamaica that they may be able to take part in. And so that provides opportunity, of course, to grow the business. So through this invitation, we invite you to participate in the exciting future ahead, and so on and so forth. The national demand for efficient warehousing solutions is rising, and the logistics sector is expanding. So they're well positioned to continue to amply serve Jamaica's existing needs for wooden as well as synthetic pallets for the food and cold storage industries, and also supply new market opportunities. All right. We are mindful, however, of the challenges such as market competition, volatility in raw material supply and costs, and capital demands of expanding our production capacity. And of course, it speaks to countering that through diversified supply sources, both locally and internationally. All right. So I just wanted to add that there before we get into the rest. And then we have some words here from the general manager. And let me see if I wanted to go through this. So it has reached a pivotal moment in its history, one where efficiency stands not only as our greatest achievement, but also our next frontier. Every day, our two production facilities operate with disciplined precision, cutting, assembling, repairing, and treating hundreds of pallets that keep the nation's goods moving. It is work that happens quietly, yet it remains indispensable to Jamaica's supply chain and economic engine. All right, so that's the GM Peter Douglas. And so let me see if there's anything here. So we may get some more information here about the company itself. So since their inception, they're now producing and servicing more than 300,000 pallets annually. This number is good because this number that we have here now, we can use this as a basis to see how much they're producing each year. So similarly, where you'll see like Carib Cement stating like how much, tons of cement they produce, we can see how many pallets they're producing and servicing to see how the growth will go over the years. Their organization has expanded from a team of 64 individuals to over 90 members across 2 facilities. Their second site is on Marcus Garvey Drive. We maintain an almost continuous production schedule, achieving more than 95% uptime, benchmark within the local manufacturing industry. So the one thing I will say that this makes me think about, so it's very good when a company can grow its team, expand its team, etc. I usually get concerned though, depending on, I guess, the skill of the laborers, etc., what that admin cost will be, right? So when we get to the financials, I'll talk about that some more. But certainly we want to watch for growth in administrative expenses for the company. That's going to be one of the areas that we want to look for. And I think I read that already. Financially, the company continues to deliver steady growth. In recent years, they have consistently maintained positive cash flows and double-digit revenue increases. So that sets for us a baseline as to what to expect. I love to see those those two things, right? Double-digit growth and the positive cash flow. So those are things that we can look for. I mean, the capital will certainly help with the cash flow, and it's just to see how much they can sustain the growth. Supported by careful cost control and reinvestment in productivity, the company's gross margins have strengthened through a zero-waste circular operation by recycling all byproducts. So that means they're lowering costs by reducing waste, right? So we now also provide the additional service of certified heat treatment for wooden pallets and crates in line with international standards, ensuring that our customers' packaging consistently meets global export requirements. All right, let me see if there's anything else. We're not just a pallet manufacturer and distributor. They've already begun expanding into high-value product lines such as garden mulch, wooden planters, engineered wood solutions, and their goal is to continue to diversify, transfer raw material into innovation, functionality, and value. I'm looking for things that we can use for our analysis here. I think I'll leave that there. And of course, this is a summary of the invitation. So we spoke about this in detail before. I won't need to go through it. These are details of how to apply. We're going to talk about that after. So I'm going to go to the financials now. Let me see if I can just bring it up from here so I can zoom in a little better. That's the risk factors that you do want to have a read of. I'm just trying to scroll to the financials. I think this is here. I went through use of proceeds already. That's a management team. Be sure to check that out as well. Yes, this is what I'm looking for, the MD&A. So the MD&A, for those who are unfamiliar, is where the management gives you insights on the performance of the company. Usually they go back as far as 3 to 5 years, depending on how long the company has been in operation. And this is probably the most critical part of the prospectus, apart from the offer, of course. The offer details, you want to read through this, understand how the company has grown over the last few years, see if there's any context that they give you in terms of what would have led to either spikes in growth or decline in numbers, and then say how that makes you feel about the company's overall performance. All right, so I'm not going to read through everything here. I'm just going to focus on the highlights in terms of the P&L. We'll look at the balance sheet briefly. We'll look at the cash flows briefly, but the meat of what I focus on is P&L for the purposes of this prospectus review, because I want to leave ample time for questions, and we'll definitely be asking the company some targeted questions when we meet with them. All right, so revenues increased to 1.08 billion in 2024, up 3.2% from the 1.05 billion in 2023, and up 104% from the 530 million in 2020. So that's certainly good growth to see 100% growth in 4 years. Demonstrated a compound annual growth rate of 19%. Now, for those in our community, I hear you ask me all the time, how do you identify a growth stock? How do you identify a growth stock? This is one of the things you look at, right? Compound annual growth rate. And certainly 19% is certainly good for that period. So that's the thing that you want to see if the company can maintain now with fresh capital, the income tax break that they're going to get as a junior market company. So you pretty much want to see them maintain that growth rate, or even exceed what they've done over the past few years. All right. So growth in 2024 was primarily attributed to higher sales for new and reconditioned pallet, despite mulch and other products taking a dip. Now, this is one of those things that I will say, I think with the passing of Hurricane Melissa, for all those persons, companies, etc., that had their pallets, that had their things that they had in their businesses, etc., they're going to need to replace all of them. So I actually think that this is a good opportunity for a company like Woodcats to essentially maybe ramp up their production from maybe Q4 last year into Q1 this year. So that's one of the things I'm going to ask them. For example, have they seen a spike in maybe requests from clients, demand for certain products, since the hurricane passed? Because I think certainly that it bodes well for them based on the industry that they're in, right? So sales of mulch decreased by 57% or 25 million due to increased levels of rainfall during the financial year. So what that tells you is that in certain conditions, certain products may not perform the same way. And the company's ability to maintain overall growth in a contracting economy reflects strong client relationships and resilient product base. And that's also why you seek to diversify, right? I won't get into that gross profit breakdown now, but this is what revenue, cost of sales, and gross profit margin has been for the past 5 years. So the revenues are the pallets, the cost of sales are the green ones below, and the gross profit margin is the white line. All right, so revenues have been consistently growing. And so, of course, if they're able to maintain the same rate, that 19%, I believe, would mean they would be aiming for like a 1.2 billion for 2025. I believe we have the 9 months, so we look at where they are for the first 9 months and see what we think they'll land at for the full year, and so on. But that's one of the things that you'd be looking for. And we see cost of sales here. So it's one of those things where cost of sales may be increasing in tandem with revenues. That's how it works, right? Companies have costs that they have to factor in, and the more you grow, the more you have expenses that may go in line. And the gross profit margin you're seeing has been consistent, where it's at now 40% for 2024. All right. So other income grew significantly. Well, other income, driven mainly by introduction of slip sheets. So this may be like different products that they have that I don't always look at other income much, because it may not be a consistent measure of performance, but it's good to have that here. And lightweight alternatives to wooden pallets that reduce your shipping costs, and diversification into complementary products. So it's one of those things to maybe keep an eye on, but it's not something I focus on. This next part is one of the things I wanted to highlight on. So administrative expenses, it declined by 6.2%, falling from 283 million to 265 million. That is good to see, right? A decline is always good in admin expenses. But I anticipate as they continue to grow out the company, add team members, etc., that cost may find its way up. Also, as a listed company, they have expenses to the JSE, different costs that they have to do now. They have to host an AGM. They have to do, annual reports, different things that may lead to a slight uptick in that admin cost. But this admin expense is what feeds into, of course, operating profit. So we want to see this managed and managed well. So the fact that they were able to get that down is good, especially since they're in manufacturing, where it lends itself to them focusing on efficiency to be able to maximize profitability. All right. So it mentions something here. This is the breakdown of admin expenses. Again, we look to see how that is for the 9 months for 2025, because I know we have that information here as well. So we'll see where they are for the year in terms of that. Profitability here, now it's speaking about, so operating profit rose 30.7%. So that's what I'm saying is impacted by admin expenses. So the lower those, the higher the operating profit is going to be. And so net profit grew from 108 million to 136 million. The net profit is important because of their dividend policy. So we'll get to the dividend policy next, but essentially they say it's up to 25% of net profit, right? So this 136 million is important for you dividend investors out there, because they're going to be paying 25% of whatever net profit is in dividends according to their dividend policy. So that's why net profit in this case is going to be important. All right. Finance costs more than doubled, increasing from 4.7 million in 2023 to 10.7 million due to higher lease interest expense. Despite this increase, strong operating profit ensured that net profitability improved, right? And that's net profit and net profit margin. would have to spend any time there. This is speaking about the balance sheet. I will just look at the balance sheet when we get to that point, because I wanted to spend some time focusing on the ratios here. So they mention here their ratios. This is good to see. Not enough companies include all of their ratios. So thank you for doing this. It saves me from the time to have to put them in Excel and, and do it myself. So revenue growth is what we're seeing here. And we got that average already in terms of the 19%. The gross profit margin here, we know for the last 2 years, it was sub 40% operating profit margin. So what I would do in this case is I'm looking at mainly for the last 2 or 3 years. I know we have a 5-year span here, but the dynamics of the market would have been so different 5 years ago than they are today. So I'm looking at the more recent ones. So I'd be looking at 2025 to maybe 2023 to kind of get a feel of where the company is now. So all these ratios, because if you notice, a lot of the numbers are even different for the last few years than they were back then, right? So their gross profit margin, their operating profit margins, etc., because they've been able to improve on those numbers, you don't want to necessarily be measuring it based on what it was 5 years ago. All right, so net profit margin was 12.6% in 2024. Return on assets and return on equity, very straightforward metric to understand. And then solvency, this is important to watch. So their debt to equity is 0.4 times, debt to asset is 0.25, and the interest coverage ratio. We're not going to get into what these means, what these mean, but if you're unclear, just do a Google search for some of these terms, and then you'll understand, right? So current ratio is speaking to, you know, their ability to cover their current liabilities. So they have enough cash to cover current liabilities 3 times over. And if they were to remove inventory from that, they can cover it 1.9 times over, which is good, right? Which means they have enough liquidity to be able to do that. And then cash ratio is 0.1 times. All right. Efficiency ratio here, still good to understand these in terms of how they turn over the inventory that they produce. So days inventory outstanding is now at 83 days. Well, in 2024, we can see what it is like for 2025. And days sales outstanding, etc. Again, for some of you beginners, I don't want to give you a headache to explain what these means, but they're all measures of efficiency. And so these are things that you track to understand how you're performing as it relates to certain things. But based on how it is tracked, sometimes you may not fully appreciate what it means for the day-to-day of the business. So I won't get into that right now. All right. So profitability ratios, they're just commenting on the ratios that they would have had there. So it's good to have that context. The 9 months is what I wanted to close out on before we get to their outlook, and then we'll look at the dividend policy. All right. So what we're looking at here is they don't have the full year for 2025 as yet. That literally just ended. So that'll probably be ready in maybe a couple of weeks or months. But we have the 9 months compared to 2025 and 2024. So you can look to see how things are kind of lining up to see whether or not they're on par to surpass numbers for 2024. So at least in revenue, they're showing growth there. Gross profit is 299 million. I should have worked out the percentages. I didn't get to see if they're on par with how they have been for the last couple of years. Admin expenses would have increased for the 9 months. Remember, that's one of the things I said we want to look for. But usually, again, as a company prepares for a listing, they have to incur certain costs during the year to kind of prepare the company for that. I don't know if that's what it was, but we see a $9 million increase in admin expenses. So it would have decreased the year before. It's slightly up here again. So we'll see where they end the year. Operating profit up 4 million. Not a large increase here. That's maybe 10%, 20% if my math is correct. Finance costs has doubled here again. So they mentioned it doubling the previous year. It's doubled here again. Profit before tax is down for the 9 months. This is not the full year though. So we'll see how they end the year. And then profit would have been 95 million. So with the higher finance costs and higher expenses, they still ended up with more net profit, which is good. And as a junior market company, they would have gained that 20 million in terms of now not having to pay taxes. So that goes to the bottom line. And so profitability should increase. I think they did 136 for 2024. So if Q4 is their best quarter, then we may see somewhere upwards of, 150 million or more. But I mean, we'll see what Q4 looks like. But to the 9 months, they would have done better than the previous year. So that's certainly a good sign. All right. So 92 million here after you do some adjustments here. So 92 million, again, the 20 million would be added for 2026 after they list. So that's how you would interpret that. And this is now overview of the balance sheet. Balance sheet is essentially when you think about a company's net worth. So just like you have a personal net worth, a company has a net worth. So their assets, liabilities, and equity is what we're looking at here. So for manufacturing companies, you will see normally investments in what we call PPE, that's property, plant, and equipment. So that figure will likely increase as a company invests in things like infrastructure, in buildings, properties, etc. So 180 million as opposed to 136. So that's normal. They need infrastructure to be able to generate revenues from. Investments is 107 million. That just means they have cash that they have to invest. All good. So total non-current assets increased to 422 million. Then inventories are relatively the same. Receivables have decreased. Excellent. You want to see that managed. So what I like to do is look at how companies manage their receivables. So I'm looking to see how that kind of tracks in terms of their management, because of course when persons owe, then it impacts cash flow. Things impact cash flow, then companies have to do things like, again, take out debt or maybe other things to finance their operations. But if they're bringing that number down, that's cash that's coming into the business that can help, right? So receivables are down, due from related parties have tripled, and cash and cash equivalents are relatively the same. So of course, they're going to get a bunch of cash from the IPO. So we'll see that, deployed in the way that they would have described, and I figure they may retain some for working capital. All right. So total assets would have gone up by about 46 million. Equity here, so share capital, of course, is 1,000. Retained earnings. So if the company is continually profitable, then retained earnings will continue to rise. We do want to see that. The only companies you see with negative retained earnings are the ones that aren't making any money. All right, so that's good to see. Deferred tax liabilities, long-term loans, small amount, 13 million. Lease liabilities, 127 million. And we have payables have gone down by almost 66%. That's excellent payables management there. Taxation payable, current portion of long-term loans. So for the long-term liabilities, there is a current portion of it. That's what we're seeing here and here. And the bank overdrafts. Remember things that I mentioned, like when they have enough cash, they may not need those services, but you use it for different things, right? So companies may use it for paying vendors, ordering goods, doing payroll, covering certain costs. But that's, a relatively small amount, 16 million should be easily cleared based on, so when you look at current liabilities being 124 million, and you look at current assets being 478 million, that's why we saw like the 3x ratio for them to be able to cover all of their liabilities. So there's no cause for concern there. All right, hopefully that wasn't too technical for anybody, but the next thing that I want to look at is their dividend policy. So I'm going to skip through these and look at the dividend policy. Well, it has the outlook for the business and strategic plan. I'll talk about that next. So it says that they operate within the manufacturing sector that is undergoing transformation as businesses and consumers shift towards sustainable and value-added solutions. Traditionally known for its dominance in pallet and crate manufacturing, the company has been strategically repositioning itself to capture opportunities beyond its core offerings. So the domestic industry is expected to benefit over the medium term from increased construction and exportation, growth in the hospitality sector, and rising preference for eco-friendly and locally manufactured products. Right? Yeah, let me continue. My brain was going somewhere, but let me stop that. So in anticipation of these trends, they've embarked on a deliberate strategy to move up the value chain. The company has introduced new product lines, including landscaping, mulch, outdoor furniture, planter boxes, custom crates, many of which are derived from recycled wood and byproducts of its existing operations. Again, they're able to save money by essentially repurposing items that are waste in one area, but they can use it in a productive way for revenue. So that's those 2 points. I think there's one more. So it says over the next 3 to 5 years, they intend to scale production capacity through targeted investment in new equipment and processes, enabling it to further production, broaden its product line, and expand into bulk distribution channels, right? So this is definitely something that I was happy to see, because it gives me a clear idea as to where the company is headed. It's not vague. It's not, we're going to implement, strategic initiatives. They're telling you exactly what they're going to do here. So I was happy to see that. The company has recently strengthened its business development capabilities to support these objectives with a focus on supporting local export businesses. So it could be why the admin costs increase, because it's when it says strengthen its business development capabilities, probably a dedicated sales manager, probably a sales team, maybe, I'm not sure. But that's what it sounds like to me. Landscaping, construction, and furniture sectors. These initiatives are expected to diversify revenues, increase margins, reduce waste and reliance on the pallet segment. Woodcats intends to focus on its Summerland retail brand, and so on, right? So the products in ranges it's showing there. So that's good to see. I think for me, though, I would like to have had some projections, because clearly they're making this investment. Clearly they would have probably assessed the market, maybe have a few potential clients that they're going to be servicing, but we're likely going to see that meet reflect or the fruit of that investment for 2026. So I'd be watching to see the reports and how they progress in that space, right? So it says the medium-term outlook is therefore one of measured but transformative growth with expected compounded annual rate in revenue of approximately 20%. That's what we're looking for, right? So by 2028. So they're well positioned to evolve into a diversified wood products business that delivers both commercial returns and environmental value. The board believes that this strategy will create long-term shareholder value, and so on, right? So good to see there. And then their strategic plan over the next 3 to 5 years. Again, I was very happy to see this, right? So whoever decided to do this, kudos to you. It gives me something now that we can use to measure the company over the next 3 to 5 years, right? So they're going to focus on a few areas here. I think it's four key areas. So the first one, they want to strengthen the core business. So expand certified heat treatment capacity by 50% within 3 years to secure at least 3 new export-heavy clients in CARICOM. Launch 2 pilot lines of composite or hybrid wood plastic pallets by Q4 2026, with at least 10% of pallet sales from alternatives by 2028. Increase pallet production output by 30% by 2027 to meet projected demand in local and regional logistics markets. I'm assuming that all of these are adjusted for Melissa, since we're in January and Melissa was October. So I'm going to assume that, right? Next is value-added diversification. So grow ancillary. I can never pronounce that word. Grow sales and byproducts along with manufacturing, furniture, and plyboard sales by 20%. Can I see that last thing? The thing is on the screen in front of me. Let me see if I can bring it up over here, because I can't see what the note is saying. I have something in front of me. So it says scale the Summerland retail brand, targeting 5 retail distribution points across Jamaica and Caricom. So pretty much they're saying they're planning to move outside Jamaica. I think that's an excellent move. And then third, regional expansion. Regional and export expansion. So enter at least 2 new Caricom markets by 2026. It didn't say by the end of 2026. It says by 2026. With 20% of total sales coming from exports by 2028. Interesting. So establish the brand as a recognized regional hub for sustainable pallet and wood solutions by 2027. And then, of course, some tech and process upgrades, and you see those there. All right. So, I mean, these don't sound outlandish to me in any way. They sound practical, logical, feasible to go after. I think the important thing to probably see and measure is how they're tracking towards it each year. So I'm hoping that for their annual reports, for the things that they release, they'll kind of say, okay, this was what we said in our prospectus. Year 1, we're at 10% of the 20, or we're at 5%, etc. That's the thing that I would be looking for and asking them at like their AGM, etc. How are you in relation to this? Because the prospectus is your benchmark, right? Whatever the company says in the prospectus is what you hold them accountable to moving forward. I'm glad it was clearly articulated so we can, have something to measure progress towards. All right. So let's look at the dividend policy, and then that will be it. And we'll talk about how to apply. All right. So during the year, the company paid dividends of 100 million to its sole shareholder at the time. Must be nice. Know that the past performance is no guarantee of future results. If the company's ordinary shares are admitted to the junior market, the directors will propose to pay a dividend policy of not less than. Okay, I read it wrong. Of not less than means that's the bottom end. So they may do higher. Subject to the need for reinvestment, of course, this is standard stuff. The statement of proposed dividend policy should not be construed as a dividend forecast or a guarantee. Dividends are never guaranteed. So at 25% of the 2024 net profit, it would be 34 million, but they said that's not less than, which means it can be more depending. So you can do a projection based on when you do your forecasting, and I'm saying this to our level 2 members when we teach you how to analyze the financial statement, and we talk about things like projections. These are one of the things that you can do to kind of estimate what would a dividend look like if the company achieves certain profitability levels. All right. But that would be it. The last thing to mention is how to apply. So I'm going to stop sharing for a second and just go IPO. I think that may just be easier to do because it should be there. Hopefully I have my login. Select your... Okay, I don't know why I'm not sharing my screen. I'm sorry. Let's stop that, share that. All right, so this is goipo.jncb.com. So it's right there on the homepage, which means you can pretty much apply now. So you click on the read more here. So it's in its pre-open state. So usually how GoIPO works, you can log in with your JNCB account. You don't need an NCB Capital Markets account to apply. You just need a JCSD number from your brokerage account, whoever that brokerage account is with. So you can view the prospectus here and all the details of the offer is here. All right. The share pools are here. If you're applying as a general public investor, you'd click on this one. The rest of the pools, if you don't know about the pool, you're probably not in the pool, right? So let me just say that. So you don't have to wonder which one is for you. If you're not already notified that you're in one of the other pools, it's likely going to be general public. Minimum is 1,000, as we mentioned, an increment of 1 All right, so it's only 283 million. That's not a lot. So if you're interested in applying, I didn't check the prospectus if it said first come, first serve. First come, first serve would mean that the earliest applications get priority. I probably would look at that, and that's probably one of the questions I'd ask them for the Q&A. But this is where you'd go, just sign in, and then you'd be able to complete the process. All right, so let me see if there are any questions. Moderator, yeah, helping me with questions. All right, so I'm seeing some questions here. We're starting with IG first. Based on their policy, does it seem like it'll be a dividend company? So Ansel from Level 2 is asking that. So I would treat this company as a growth company. Now, it's not for me to speak that they do have a dividend policy. I think everybody knows my stance on that already. So I believe a growth company should focus on growth. They do have a dividend policy though, because there are some investors who have a priority for dividends. So this person is confirming that yes, first come, first serve. That means if you're interested in applying, you want to apply sooner than later. Let me see if there are any other questions. No other questions there. Okay. Thank you, Renee. That was I say Kerrick's comments. I think everybody is happy with me because of another stock. I won't call the name right now. You're welcome, guys. That's all I'll say. All right, so let me go through the chat here. We wrap this up in a few minutes. Adrian is asking, will this review be up for any time? I'm currently at work. I'm not able to view live. I'm on vacation. That's why I'm even able to do this live. But yes, this is on YouTube. This is on both our YouTube channels, Investor Relations Curated and this primary channel here. It will be up forever. Lunch and review. Yes, I think that's a new series. Renee may start one day. Who knows? Johan is ready to take notes. Good afternoon, Sunil. My biggest curiosity, how concentrated is revenue? I would want to know who are the largest customers, what percentage of sales do the top 5 to 10 customers represent? What happens if one major client leaves? Good questions. I'm not sure. I mean, the revenues sounded like it was concentrated in pallets, but they've clearly communicated that they're looking to diversify said revenue. So that concentration risk that might have been there is something that they're hoping to mitigate with the diversification. But the core business is, always going to be core business, I think. Who the largest customers are, I'm not sure if they'd be willing to share that, but it's certainly good to ask. Yeah, so good question. For sure. I'm not sure if they'll answer that openly. We'll see. All right. How dependent is the profitability on lumber and wood prices? What hedging, forward contracting, or supplier diversification is in place? Another excellent question. So that, Renee, can you take note of these? And we ask on the broker and company Q&A on Friday. I believe in the prospectus, they mentioned something to the effect of timing their orders to reduce impact risk of price fluctuations. So, I mean, it's certainly all manufacturing companies, their prices are going to be, their profitability and pricing is going to be dependent on their supply, right? So, I mean, I'd say they're going to be extremely dependent in terms of their profitability on their input costs. I don't think that's a hard stretch to assume. But I mean, pricing usually when you purchase volume, you don't really deal with the same sort of price movement that the retail customer would deal with. And if there's going to be an increase on the part of their supplier, it's probably likely going to be with some consideration or discussion with the company, right? Because when you spend, let's say I think their cost of goods sold was what? Like, I don't remember the amount, but when they spend hundreds of millions of dollars with a vendor, they don't just up and increase the price without some conversation with their client, right? Don't think they went into much detail. I mean, I don't think they're going to, but certainly a good question to ask. Any insights as to detailed reason for sale? I don't think it's a complete sale, but I mean, when you make an investment in terms of an acquisition, there's usually an exit strategy, right? So I'm sure when they would have been in talks, well, let me not speak on behalf of the company, but to me, it's always assumed when a company does an acquisition, especially since it's not their core business, right? That's not Detail's core business. It's likely the plan was always for an exit through an IPO or maybe a private sale. So that's what I look at it as. So at some point as an investor, you have to realize your profit. You have to take something, off the table and say, okay, I've made this investment, I've grown the company to X point. Let me share that now with other persons, right? These always going to, I'm not following that statement. Maybe repeat it. These companies are growing fast before IPO, then bam, they start. Well, I think it depends. I wouldn't say, I don't typically generalize companies that way, nor do I generalize IPOs, right? I've never seen two of the same IPOs. Look at the last IPO where it started off a certain way that was more due to the market, I think, and then an opportunity came where the company became tremendously valuable, and so the price doubled. So you never know. I'd say it depends on the industry. If the industry is not critical to the economy, the business will struggle, and so the price will struggle, right? That's how I see it, but I don't think they necessarily have that issue based on the industry that they're in. All right, what effect will Hurricane Melissa have on them? I think it was, so this is a point I was making, that for let's say they have clients in those parishes who had purchased pallets, who had purchased products from them, now they need those products replaced. So to me, that would be good for them. It doesn't sound, their operations are in Kingston, so they would not have been impacted by Melissa itself, so they would not have suffered loss. So if the West and those areas need stuff, it may actually be good for them in terms of business, right? What are their growth projections given the context of post-Melissa environment and other macroeconomic factors? I think we spoke to that already. So, I mean, that would be a good question to ask them, but they've stated their strategic outlook. They've stated what they expect to do in terms of growth. So I think we just hold them to that. Very good info. You are welcome. Possibility of impact. Okay, I think we covered that already. Nick says it looks like a growth stock. I'm inclined to agree. At least that's the category I would place it in. At a glance, it seems to be one of the best IPO prospectus. Lots of metrics given, easy to read and understand. It's up there for sure. I love the detail. I love the clear language as well. Simple business, easy to understand. And that's what I said at the start, that it's an easy read. So I know some persons may be afraid to read a prospectus. I wouldn't be. It seems pretty straightforward to go through and to understand. And so just, be sure to read through it to get a feel as to what you may be getting into. All right. And Gen Z, I think we confirmed that it's first come, first serve. How can I get to purchase an IPO if I'm using JMMB? So you can still use Go IPO. Just use your JCSD number from JMMB, but just understand that the EMA account ID that you see, I don't think is the same as the JCSD number. So you may have to ask JMMB for that, and then you can use that to apply, right? So you don't have to use Moneyline to do it. Just go IPO. With the increased tariffs in certain countries, I wonder if they've identified that as a risk for shipping. Maybe only shipping to the US, but it doesn't mention US, it mentioned CARICOM. So I don't think they have that risk there. Detail already got a nice chunk of change, 100 million in dividend last year, plus the cap gains they're going to realize and unrealized. Well, that should tell you something about Detail then, right? So can you calculate what the yield would look like based on the 20? I thought about that music guy, but I didn't get the chance to. So I would just, so that 34 million that I think I worked out, just look at the number of shares that will be outstanding and divide it by that, and you'll get the yield. So 1 foot says roughly 2%. So yeah, they would have to, work on that, right? What is the company's market share? Who are their competitors? Again, they may be able to speak to that. Yes, we'll be doing an interview on Friday, right? Not our CEO series interview, but we're going to be doing an interview with the company and the broker, right? So we're going to have multiple persons on. Renee is going to be leading that Q&A, all right? Just joining. I'm not sure if it was discussed, but it is said only available to Jamaicans in Jamaica. That's usually what it is. So if you have a Jamaican account but live overseas, yes, you can still apply. Usually it does say that though, right? All right. Let me do a quick check again for any questions. All right, guys. So we are going to be having a Q&A with the broker and Woodcats on Friday. So be sure to check that out. I believe 2:30 is the time. We sent out an email about it about an hour ago. So you can feel free to subscribe to our newsletter. If you're in the community, we'll post the link there as well. If you're brand new to investing, not sure where to start, check out our Learn Level 1 free course that you can sign up for. And let me see. Yeah, that's it. So thanks to everyone for joining. Let us know if you have questions below the video. If your question was not answered, place it below the video so we have it for the Q&A on Friday. We want to take as many questions as possible. We're going to be asking in the community as well. And we're going to be looking at the different groups to see if there are any questions that come through those mediums. But feel free to post it here. This is the place that we wanted to post it, or in the community. We're also doing a poll as well to see whether or not you're interested in the IPO or not. It's just something that we always like to track. So Bipin is asking, how can we subscribe? So the link should be in the description of this video or in our bio. But once you sign up for anyone, or once you sign up for a level 1 community, you get access to the emails that we send out. All right. All right, everyone. Thank you so much for joining us. I'll see you on the Q&A on Friday. You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our Learn Method.
Before you invest, you need to 1, look at your financial position. 2, establish your personal goals. 3, assess your investment options. 4, research the best options for you. And 5, normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.